Right, we have our first caller for the day. Satya from Hyderabad is calling us. Satya, thanks for calling in. How can we help you?
Yeah, hi. Hi, all.
Hi.
Good morning, everyone. So, I was currently holding Vodafone shares
Okay.
at a quantity of 4,000. I have bought at 8.5 rupees.
Okay.
So, can I hold or sell at the moment?
Okay. What's the time period, time horizon that you're looking for to keep holding these shares?
3 months approximately.
Okay, 3 months is the time horizon. And may I ask, when did you buy this, and what was the kind of thought process of buying Vodafone?
Actually, I have bought this stock a week ago at 8.5 rupees. Actually, it is a penny stock, right? There will be a chance to make a money like that.
Okay, Osho, I'll come to you for this one. Should you continue to be invested in Vodafone for the next 3 months?
See, overall, I think that Vodafone is a very risky counter. Again, being into a penny stock also below 10 rupees. So it will be very difficult for any price action to be tracked in this overall space. But I would say that in the overall trajectory that Vodafone is, it takes cover approximately around the zone of 8, 9 every time, and on the higher end, it moves towards the zone of 14 to 15. So this is the historical trend for this counter. So in the last 3 weeks, we have seen a decent revival from the lower zone of 6.8 or 7 odd levels, and there has been a decent move. I won't say that it is a very strong movement that can be expected in this counter, but I would say that if person is having an aggressive approach, then can definitely hold to this counter with a strict stop loss of the bullish gap that has been made around the zone of 7.45 and 3 months perspective. Definitely looking at the historical data, this counter may move towards a higher levels of 12 to 13. So one can definitely hold, but only the aggressive traders being aggressive in market can obviously hold this counter. I won't advise fresh recommendation in Vodafone as of now.
And do bear in mind, buying penny stocks is a very high risk strategy. You could lose a significant amount of money. I'm sure I'm sure Ashish will agree with that view. Ashish, I'm coming to you, and apologies for keeping you waiting. On Tata Motors, we've got a question. Devraj is tuned in, and he's asking, based on price to earnings multiples at a price of 809 or thereabouts, considering that it has dropped about 22% in the last 3 months, is it looking more attractive now? Ashish, can you hear me? Okay, we're trying to fix that feed. In the meanwhile, let me come back to you, Osho. We've got a question from Mr. Ekambaraya, and he's writing in from Hyderabad. He's asking for a view on latent view, and he's bought at a price of 441. He's asking what the view on the chart should be right now.
See, overall, there has been a corrective phase, which is latent view is into, and it is hovering well below the 200 a simple moving average after a very long period of time. So I would say that for a fresh entry, I would have recommended it on a higher levels of 500 plus. But once the position is already taken at a decent levels of 440, so I would say to stay invested in this counter. On the lower end, again 438, 435 should be the stop loss that one should keep in this counter. Overall, there is a potential of having a sloping channel breakout in this counter in the coming period. I expect that in the coming period, the time it breaks out 490 to 500 odd levels, there is a very good possibility of having a very strong returns in this counter. So definitely a hold for short term perspective. 435 should be the stop loss that one can look for.